Hey everyone, today we're diving into how to get Bitcoin, because there are tons of different ways to do it, each completely unique in approach, complexity, and accessibility. Let's break them down one by one, focusing on what makes each special. First up, Bitcoin mining. I won't re-explain what it is. I've got a dedicated video where I break it down in extreme detail, but I'll just say it's the most complicated and resource-intensive method by far. Today it requires investments from thousands to millions of euros to mine effectively, because network difficulty has exploded after multiple halvings. It's only practical for industrial-scale operations with cheap energy and cutting-edge hardware. For individuals, pure theory, more dream than reality. Second method, peer-to-peer exchange. Here's where Bitcoin's decentralization magic shines. As we said, it's a currency that doesn't depend on banks or governments. So there's no power in the world, no state, no central authority that can stop a direct exchange between two people. This is the heart of peer-to-peer. You and another user freely agree, transferring value through the blockchain without middlemen, leveraging Bitcoin's permissionless nature that guarantees privacy and censorship resistance, as long as you use decentralized, non-custodial wallets. Of course, this applies to purely decentralized platforms and wallets. Things change with the third method. Traditional brokers and apps like Revolut, XTB, or Trade Republic, which make everything mobile and accessible right from your smartphone. These integrate Bitcoin into regulated financial ecosystems, offering a bridge between fiat and crypto worlds. You don't own the private keys to your BTC, the platform custodies them, but you gain simplicity, regulatory compliance, and SEPA bank account integration. Perfect for people wanting Bitcoin exposure without diving into blockchain complexity, even if it sacrifices full sovereignty over their money. The fourth method is perfect for business owners or service providers. Accepting Bitcoin payments becomes a passive, scalable way to accumulate BTC over time. This taps into Bitcoin's growing adoption as global payment method, attracting crypto enthusiast customers who prefer fast, irreversible transactions without chargebacks. For entrepreneurs, it means diversifying revenue streams, hedging against fiat inflation, and opening up to international markets. Converting BTC to local currency only when needed, creating a steady flow that rewards economic foresight. Fifth method is a simpler, regulated option. Centralized exchanges like Coinbase, Binance, or Kraken, where you buy Bitcoin with fiat currency in just a few steps. You sign up, verify your identity with KYC, mandatory for anti-money laundering, deposit funds via SEPA or credit card, and buy the fiat Bitcoin pair. These centralized hubs slash entry barriers with massive liquidity, real-time market prices, and trading tools, but they centralize control, custody, and compliance, making them a compromise between speed and security for mainstream users. Crucial point for centralized exchanges, they've got a turbulent history. Since Bitcoin's birth in 2009, these platforms have suffered numerous catastrophic failures, burning billions and user trust. Remember Mt. Gox in 2014, the first major exchange that collapsed, losing 850,000 BTC to hacks and mismanagement? Or Quadriga CX in 2019, where the CEO died taking 190 melters in private keys with him. More recently, FTX imploded in 2022 in an 8B fraud scandal, leaving creditors waiting years. These cases prove that despite convenience, exchanges are centralized vulnerabilities to hacks, bankruptcies, and regulators. So be careful, limit deposited funds, and consider self-custody with hardware wallets to avoid risking everything. The sixth and final method, Bitcoin ATMs, an old-school but instant way to convert cash into BTC. In theory, they represent the physical meeting point of the analog and digital worlds, standalone machines that bypass the web, using standard protocols to generate QR code addresses and confirm on-chain transactions, ideal for relative privacy and cash-based access in a digital payment era. They're a remnant of Bitcoin's earliest adoption, but remain powerful for tangibility and speed without online accounts. Some require KYC, others don't, depends on your country. These methods cover every Bitcoin angle. Choose based on your needs. Disclaimer and transparency. The script is original and handwritten by me. The digital avatar is my personal creation. My content is not financial advice nor investment solicitation. Study and always do your own research before investing.